Siddharth Sanyal, Chief India Economist at Barclays Bank, joins us on the show. Siddharth, good to have you. Thanks so much for joining in. Well, a couple of people believing that this could be a big overhang and the targets that are given are likely to be overshot and with a margin. What's your sense?
That's the second part of the debate, whether the numbers will ultimately be overshot or not. But even if they are not, even if we believe the 5.1% of fiscal deficit number and 5.7 trillion gross borrowing number for the year as a whole, that's still pretty much a challenge in our view. And what we are holding that even if the government announces a 60% borrowing in the first half, ultimately in the course of the first half you are facing huge shortage of demand. Our sense is that the shortage will be anywhere between 1 trillion to 1.7 trillion, and that will be putting quite a bit of pressure on bond yields even from this level. We are sensing that our yields are going to gradually towards 870 kind of levels, if not higher.
Siddharth, hi, morning. What about inflationary expectations? Because they as well are rising in the economy due to the government borrowing program, anticipated fuel price hikes as well. What is your view on the situation and how bad could it get from here onwards?
Yes, that's true. The headline inflation expectations are somewhat adversely getting impacted in the last few days, given the excise tax hikes as well as the possibility of fuel price hikes. But fortunately, the core inflation number is not turning that bad. It's more or less getting sticky in the sub 6% levels. In the coming months, we can actually see the numbers at levels closer to 5%. So it's a mixed bag in case of inflation. The headline numbers are getting worse, but not the core inflation numbers.
So that the market is already anticipating a moderate expansionary stance. And some experts have cut down the repo rate cut estimates to about 75 to 100 bips versus now, versus the earlier 150 bips for FY13. What is your expectation of what the RBI may do in April and in the first half and full year FY13?
Well, we are very much maintaining the stance we were having for quite some time now. We are talking about around 100 basis point cut over the course of the financial year, and maintaining a cut in April as of now. So the issue is the headline, just a part of the issue we just discussed just a minute back, that the headline inflation number is still looking ugly or even uglier, but the core inflation is softening, which RBI asserts very high importance they assign to this particular number one. Number two, the growth situation is equally bad. So at some point of time, your policy stance would have to be much more balanced. So far, we have seen RBI focusing unilaterally on inflation and inflation fighting.
Okay, Siddharth, leave it at that. Thanks so much for taking the time out and joining us for this quick perspective.